In this video, we're going to be looking at Symbotic's warehousing as a service idea and whether this business model could be the future of warehousing. Now, Symbotic stock since going public in 2022 is up 252%. It's pulled back from its recent highs that it met in August over recession fears, but we'll see what's going to happen moving forward. Analysts have it at a 53% potential upside. Here's an article on CNBC that talks about this whole concept and likens it to cloud computing for the physical world. It's very interesting. So Symbotic has worked with these big box retailers, major clients thus far. And a few months back, they started talking about this whole warehouse as a service idea, and they're launching it as a joint venture called Greenbox Systems. So this is a joint venture with SoftBank, and they're saying that it's a $500 billion market, and it's an example of the kind of change AI can bring to the economy at large. If it works, Greenbox will reach companies that could never afford the multi-million-dollar required investment in the same way cloud computing puts high-end information tech within reach, said Dwight Klapik, an analyst at technology research firm Gartner. I've seen a lot of robotics tech, and I've never seen anything like it in my life, TD Cowen analyst Joseph Giordano said. Compared to what it replaces, it's like day and night. So if you're not familiar with Symbotic, it's a warehouse automation company, and they've got big contracts. They've mostly worked with Walmart so far. I've made many videos on the company that you can check out. But this is a revolutionary idea, this whole Greenbox venture, because this is unlocking $500 billion of potential addressable market here. But the key is that it's going to bring it to smaller players that couldn't afford Symbotic system, which historically has been pretty expensive. You know, it costs something like $100 million to install. So if you're not Walmart, Target, and companies of the like, you know, if you're a small company, you probably couldn't afford their system. This may change everything and even enable something that's never been possible before, which would be for companies to really share warehouses, having a lot of companies that are selling all these little items in the same warehouse that historically just wasn't possible because it would create too much confusion and the automation just wasn't there to really handle that. But this system may actually offer a solution. So they brought up SoftBank's disastrous venture with WeWork. And, you know, the whole idea there was that WeWork was going to be a space as a service. But there's a big difference between WeWork and Symbotic. Obviously, there's a lot of proprietary stuff here with Symbotic. At Greenbox, the technology is the whole point, Giordano said. And unlike WeWork, which wanted people to change the way they used offices, Symbotic and Greenbox are out to let companies that already run warehouses boost efficiency and profits, he said. Now, SoftBank owns more than 8% of Symbotic, and they also own 65% of the Greenbox venture. So Symbotic owns 35% of the venture. And then Walmart also owns 11% of Symbotic. They're also their biggest customer, accounting for almost 90% of the revenue. And Walmart had made the announcement that Symbotic, over the next few years, they're working on retrofitting all 42 of their regional distribution centers in the US here. So again, they've been attracting these big customers. They've been adding them. They said that their idea was to add 1 or 2 new customers a year. So they've worked with a few other companies that I've discussed on the channel. We share the same vision of going big and going fast, Symbotic CEO Rick Cohen said. We believe this market is massive. Symbotic boasts a backlog that with this new deal has now soared to $23 billion. They already had a $12 billion backlog just from their business with Walmart and a few other big box retailers. Now they added $11 billion to that. And they're also expecting their first billion-dollar revenue year here in 2023. And they're also expecting to break even on an EBITDA basis for the first time in the fourth quarter. So Symbotic systems costed anywhere from $25 million to hundreds of millions of dollars. And, you know, the system utilizes all of these autonomous robots that are scurrying around a warehouse. They're traveling at speeds of up to 25 miles per hour. They've got palletizing, depalletizing technology. And it seems Symbotic really has this end-to-end solution where these packages come in the door and everything from the unloading all the way to putting it onto trucks, you know, they're able to do everything really with minimal human input, whereas many of these other warehouse automation plays, from what I've found, may solve for points, specific points in the process, but they also face other points of failure. They don't really have an end-to-end solution. And that's what Symbotic has said, is that their technology seems to be far ahead. But if you have insight into this industry, let us know in the comments below. Because as far as I could find, I didn't find anything that seemed as advanced and as end-to-end as Symbotic system really seems to be. So there are other warehouse automation plays out there though. So because Symbotic system is so high-tech here, the AI's precision will let multiple companies share the same warehouse and even commingle their goods for efficient shipping without confusion. So here's where it gets really interesting. And again, this may be what can set Symbotic apart from the pack. It says the AI's precision will let multiple companies share the same warehouse and even commingle their goods for efficient shipping without confusion. Much as cloud computing lets multiple clients share the same computer servers, Symbotic may enable a business model that's likened to cloud computing, bringing that to the physical world here, enabling all of these different companies use it for storage as much as they need. So this is really interesting because Symbotic may bring the business model of cloud computing and make it possible to apply that to a warehouse setting or the physical world here. Because when you think about what cloud computing is, companies buy storage. Sometimes they need more, sometimes they need less. A company like AWS hosts them. They do all that. They're working with all these different companies. They're storing their data. And what Symbotic will be able to do here is work with all these different companies, store their goods in a warehouse, and depending on the size of those companies, they may be able to put, let's say, 4 small companies in one warehouse, put all of their goods together to really make it efficient, make it an efficient operation, save space. And because their system is so good at differentiating the products, it'll work because it'll be able to efficiently and quickly go and get those products when they're needed, store them, ship them, whatever needs to be done. So they're basically bringing something to the physical world that wasn't possible. I mean, historically, you can't really have all these different companies sharing a warehouse. Small companies may not have been able to afford big automation systems, but this will almost really democratize the whole warehouse automation industry to smaller companies. This seems to be a revolutionary concept. So this joint venture should also help Symbotic reach profitability because it's capitalized 65% by SoftBank, 35% by Symbotic. They've put in a total of $100 million between the two. And the joint venture is going to buy software from Symbotic, then sell the warehouse space, equipment, and related services as a package to the tenants. So Symbotic, it's taking away a lot of the work and the capital intensive parts from Symbotic. So there's a lot of questions. There's some potential threats here. The venture could either develop warehouses or rent them, though Symbotic said it will probably mostly rent them. And the rise of Greenbox, it's going to double Symbotic's potential market. It also nearly doubles their backlog. And they've said, early adopters of the business are going to be grocery stores, companies involved in packaged goods, and eventually Symbotic plans to expand into new verticals like pharmaceuticals and electronics over time. But when you free up a $500 billion opportunity, you're definitely going to attract attention. You're going to attract maybe some unwanted attention and potential competition here, especially when we get into at the bottom here, just what this makes, the cost savings that become possible. So Symbotic has been in this hyper growth stage here. Revenue over the last quarter jumped 77% year over year, up to $312 million. They're on track to earn over $1 billion in revenue this year. And the system really just seems to be revolutionary. Clients stand to save money all the way through the warehouse. Giordano estimated the savings at 8 hours of labor per outgoing truck. The technology can also cut space rental costs by allowing goods to be packed closer together and stacked higher. Now, kind of like what I said earlier, using the facility as a service will let seasonal companies, so that's another business opportunity, seasonal companies cut back on the space and robot time they use during slow periods rather than carry them all year. The warehouse should run with many fewer workers. Walmart recently had said their technology investments, like the Symbotic Alliance, will let profits grow faster than sales. More than half of distribution volume will move through automated centers within 3 years, improving unit costs by about 20% as 2/3 of stores are served by automated systems. So you look at these giant companies that are constantly trying to show growth in some way. If Walmart can't continue growing the top line, they can definitely do things to grow their profit margins, which they have been doing. That's why they hired Symbotic to retrofit and automate 42 of their regional distribution centers. So I think that this is a trend that a company like Symbotic is really poised to capitalize on, as we might see a shift from trying to grow top line growth to, if you get into tough times, maybe companies are focusing more on efficiency, focusing more on driving up profit margins, and they're going to be knocking on Symbotic's door. So competition, is it coming? It definitely could be. Again, you've got other companies in the space. You've got someone like Amazon. If they ever wanted to, expand into this space, they've got obviously great warehousing expertise. They're employing tons of robots. They could kind of do something similar as they have with their AWS, their web hosting model, where they launch, Amazon warehouse services, another version of AWS, I guess, like Amazon Web Services. We'll have to see what happens here. But analysts on average are projecting Symbotic shares to rise another 53% in the next year. So that would just about get it back to its highs here, which nothing really changed. It kind of, I think we got some irrational exuberance on the way up when it went up 100% in a month from May to June of this year. Pretty wild, but it kind of went back down because of, I think, all these recession fears started coming out. And now it seems to be heading back up, but we'll have to see what happens. I look forward to hearing what you guys think of Symbotic and this whole idea of warehouse as a service in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club. I'll see you guys next time.